Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview series, and I'm delighted today to be joined by Sara Akbar, Chairperson and CEO of OiLSERV Kuwait and Non-Executive Director of Petrofac. Sara, thank you so much for joining us today on Halftime Talk.
Oh, my pleasure. My pleasure.
Great to have you, and a lot to catch up on in these 20 to 30 minutes. So let's start by talking about, what's in front of us today in the oil market that's being, headline news, really, isn't it, every day, which is the tensions in the region here, in the Middle East, in the Gulf. We've had a few months of disruption to oil flows, but the oil is still getting to where it needs to. But I'd like to kind of ask you your explanation of why, contrary to what many of us may have expected, that this premium in an oil price, the bullish sentiment that we would expect to feed into oil prices when we have these tensions does not seem to be happening. In fact, the contrary. What's your take today on how escalatory the situation is in the Middle East for the oil markets?
So, Diana, what happened over the last 3 weeks was that we had the risk of a real serious nuclear war happening in the Middle East. And, the war between Israel and Iran could have been a real serious matter for not only the region, but for the whole world, because as you know, probably 30% of the energy that goes out to the world comes from this region. But of course, there are some counterbalancing arguments. The first one is actually nobody in the world, none in the West or the East or in the Middle East or anywhere, that wants this war. And that's why there was a lot of pressure on both parts of the conflict not to go into a real war and to make it like a show more than a real thing. So this realization that nobody wants this war and there is enough pressures from every side not to escalate is definitely a factor in what you see today. Now, the second thing which people tend to forget, that look, the US today is the highest oil producer in the world. I think they went all the way to like 15 or 14 million. I forgot the number now because they keep increasing it. And so there is a huge change in supply outside of OPEC. There are new countries that are coming into the play. People don't see the risk of supply coming from here, and especially that there is already closed capacity. So the marginal capacity that exists in the market in case of any incident gives this cushion. You have additional oil from outside of OPEC, it's another cushion. And then people don't see the seriousness of this war anymore because they know it will not be in the best interest of anyone to go further. I think the combination of these elements puts the oil price where it is, and not real fear of shortages of supply and not real fears of actual war.
Okay, that's great. So we have now a picture of why we're seeing oil prices stable. And you mentioned supply, non-OPEC and OPEC spare capacity, and of course, a belief that we're not going to have an escalation. Let's talk a bit about then OPEC Plus and how it then will take this on board, this reality, and its likely action in the second half of the year. Of course, everyone's been talking about what's it going to do about these cuts. We have quotas being reviewed in June at their meeting. And expected to be some changes there. So how do you think OPEC and OPEC Plus, the group as an organization, is likely to sort of manage and act in its role going forward, particularly from June onwards?
So, Diana, for OPEC Plus, they have closed capacity, and I know every single country now that is part of this cut is suffering because they would love to produce more, but they are restrained because they can see if they put more oil in the market, then the prices will go where they really don't want to see it at those levels. So there is a lot of pressures, even internally within OPEC, to do something. However, looking at the situation, I don't think they can afford to go back and put more oil into the market. They can't, simply because there is plenty of additional supply. I mean, this situation we were in actually in 2014, where the shale oil, the boom in the shale oil, it drove the prices down, and everybody suffered dramatically. So, do we want to go back to that scenario where we have a real war between the shale oil and OPEC? I don't think so. People learn their lessons, and we are better off at these levels where people can, every single dollar matters in the price. So I think they will continue to have these cuts going forward until they see the time that this demand pick up seriously, that can, put back some barrels into the market. But at this point in time, I don't think in June they will change anything.
So that would mean that they're willing to sort of give up a bit of their market share because we see this other non-OPEC oil, as you said, a replay of 2014, 2015, when shale was on the rise, obviously, and perhaps took OPEC at the time by surprise. But now we know what things are, right? So everybody sort of seems to be, you're saying, working together to maintain this price. And what do you think is a comfortable price for the OPEC members, particularly the Gulf producers? Are they anything above 80 is fine, or would they be looking to target a bit higher if they could?
Well, anybody, not only OPEC, if they can get a higher price, it would be nicer. But we have to live with the realities of the day. So if we get $80, it's good. If we get 85, it's even better. But they don't plan for a floor on price or a target. They don't work within those kind of premise. How do they see themselves there? Let's look at this. So I think the Middle East at this point in time sees themselves as the place where East meets West. And in this context, we have a huge Southeast Asia, Chinese interest in the region, and big players, big roles for China and for all. And at the same time, we have all the Western companies working and governments interested in the region. And so we are actually the place where we found this formula for everyone to come and do work here and get the benefits of the relationships and so on. And partly because we see ourselves as the people who kind of have responsibility for securing energy for the world. And through securing this energy, we can bring prosperity to the world, because without this energy, nobody will flourish. Imagine if the oil prices go to 200 or 150 or whatever, what happens to the rest of the world? I mean, we are already battling with inflation. We cannot afford to give more trouble to the rest of the world. So this role of seeing the Middle East as the area where provides that certainty, that reliability, that security for supplies is what is giving the Middle East their position. And that's why in every single step that OPEC or collectively what we do is to be in that same position where we feel we are contributing to this world in a good way.
Okay, I mean, you mentioned, Sara, China there. It has an interest, obviously, also in the region, clearly because it gets its oil from here. And of course, one of those suppliers is Iran. I wanted just to talk to you in terms of this sort of, everything for the common good. We see the US now talking about renewing or adding sanctions on Iran. We saw that those have not really been implemented, the ones that are already existence very much the last year. For that reason, the US wants oil available. The US wants Iranian oil in the water. What do you make of the recent threats to increase sanctions there? A lot of people saying no impact whatsoever. And in relation to the US's relationship with China on that front, I mean, how far do you see that being pushed, if at all?
So I don't know what exactly are the new sanctions, but look, they have Iran been under sanction now for like 30 years, or forgot how many years they have lived through sanctions. And they managed to figure out ways where they can still export oil, still do business with all the sanctions they have. So what additional sanctions that can change this picture? I really have no idea. But whatever sanctions you bring to the table, there are always a way to go around them. Look at Russia now. You know, Russia is under huge sanctions and they still sell their oil. They still manage to get it through. And, new ways of actually dealing in Russian oils have emerged, and new players that are dealing Russian oil that never played that game before. But people always find these ways and techniques. But, in my opinion, what really matters to China more in the region is not the Iranian oil, it's more the Iraqi oil. Because if you look at the fields in Iraq, they are mostly controlled by Chinese companies. And the way that, of course, these contracts work is that the Chinese companies get oil for everything that they do in Iraq. So I believe a big portion of actually the Iraqi oil is actually going to China at this point in time, more than anywhere else in the world, simply because of the amount of Chinese investment in the oil fields in Iraq. And not only oil fields, I mean, they are investing in everything, and infrastructure, buildings, schools, whatever. And in return for that, they are getting oil. So genuinely, if I was China, the most important country for me in the region would be Iraq, not Iran, because probably I don't know how much oil they get from Iran, but it's probably 4 times that what they get from Iraq, and that's why for them to keep this channel open is very important.
Very important.
So very, very important.
What about, Sara, can you shed some light on any update on, I mean, the Iraqi Kurdish pipeline, obviously, which goes to Turkey, obviously it's shut, it's had its issues. There are reports of the Kurds now smuggling a lot of that oil by truck to various destinations, large amounts, according to some report, about 250,000 barrels a day, apparently. I mean, is that happening? And where does that leave the Kurdish part of the Iraqi oil industry, if you like? What the prospect going forward for what has been a very sort of sporadic segment, hasn't it, of supply?
Correct. And, I just want to, bring up this topic of the visit of Erdogan to Iraq, which was super successful. They signed so many agreements, MOUs, you name it. They agreed on this development road going from with Qatar and UAE and so on. So Iraq actually is trying very hard to mend its relationship with Turkey. And this original pipeline that was taking oil from Iraq to Jihan was an Iraqi line. I mean, the central government agreed this with the Turkish authorities, and they, used to have, they have still agreements. And that was the basis of the arbitration that they won, that they had these agreements, and the Turkish government, did not respect them taking Kurdish oil through those lines. So now the new agreement is actually that the Iraqi government will again take control of the line, and they will ship oil. The only oil that will go through that line is any oil that is agreed by the government, which means that the Kurdish government has to play this game. They cannot escape it anymore. And you are absolutely correct. There is a lot of smuggling. It's been going on since 2004 or 5, I think, smuggling a lot of oil from Kurdistan through various routes from Iran, from Turkey, from wherever.
But payment has been the issue, hasn't it, to the Kurds? I mean, that's been their main sort of...
No. Not really, because that payment doesn't go to the government. It goes to the Kurdish government outside. They have bank accounts, I don't know where, but I don't think the payments from the central government to Kurdistan has been an issue, because there were certain agreements that was not respected. And there are certain demands from the central government to Kurdistan that you need to give us this much oil so that we give me this much money. But what Kurdistan is saying, we are not producing that much oil to give you, I think it was like 400,000 or whatever, 250, I forgot the number. But so the discussion still are ongoing. I think this visit from Erdogan will make a big change to the game played between Kurdistan and the central government. And people have to come to the reality that at the end of the day, this is one Iraq. There are no two Iraqs. There is Kurdistan,
Yeah.
it's a region in Iraq, and they have to play one country against, Turkey against everybody else. And there are international agreements that have been signed. So there is some progress, but I don't believe they are there yet for the Kurdish players to start, doing what they used to do before. It's a
Okay,
different ball game.
Yeah, different ball game. Thanks, Sarah. Let me ask you a little bit about, let's talk about Kuwait a little bit as well. In terms of its trading, KPC's trading aspirations, it's about to open up this new trading arm. Of course, as we see, other Gulf NOCs have already done very successfully. Of course, Aramco trading being one of those. I mean, what do you think is spurring, after many years, why hasn't this happened before? And what is the big advantage, do you think, of KPC having and establishing a trading arm? Do you see it go beyond trading its own oil? And how's that going to impact generally the trading sector, if you like?
Okay, Diala. So the reality is Kuwait. So we have new leadership in KPC. I mean, Sheikh Nawaf, he's fantastic. I mean, with his background and with his knowledge. So that is a factor, let's put it this way. And the whole leadership team in KPC today, I mean, they come from the same kind of backgrounds, and they are mostly technical and, good people who can think internationally. And Sheikh Nawaf definitely thinks in a very international manner. So this is the first factor. The second factor is by nature. Since we started in life, Kuwait has been a trading country, and the trading genes are our genes. So I think the combination created this idea that, look, we don't have to produce 5 million barrels, but we can trade in 5 million barrels. And we should trade because we are successful traders. That's what created Kuwait in the beginning. So it's just, a de facto. We can do this, so let's do it. And I think Sheikh Nawaf being there is the driver to recreate this trading entity. And simply because, think about it, today we import 800 billion scuff of gas every day through LNG shipments, and we buy it from traders. And, some of the fuel, petrol, then some of the shortages we buy from traders. So, but this is our business, for God's sake. Throughout like for 300 years, we've been traders, and this is what we are good at. So let's build on that and build our relationships, because we have fantastic relationships everywhere. We are very benign traders. So, and we are welcome everywhere. So we're building on those strengths. This has huge logic in it. So that's why I think it's moving forward now.
Okay.
Although,
Yeah,
we don't have, I mean, we just nominated a new PM. We have continuous tension between the parliament and, we have all of those political instability areas in Kuwait. But I think for KPC, it's just business as usual.
Business as usual. Good. I want to go back and touch, Sara, on OPEC again, but and again, I mentioned it. This, the new quotas that may be issued. It's one thing for them whether they're going to repeal any of the cuts in total or not, whether they're going to start to retract some of the voluntary cuts by Saudi, for example. But what about these quotas going forward? One main conversation last year within the group was about the countries that were not complying and still aren't. Iraq, there's some question marks on its barrels as well. Of course, you've got the Russia element, which is busy with its war in Ukraine. Do you forecast that we're going to see an official change in quotas, on paper at least, at the June meeting, the UAE being one of them that's been asking for that, or not?
So you see, before, so last year, there were few countries that could not achieve their quotas. So you give them a quota, but they, on paper, they have it. The reality, they couldn't produce it. And there were countries that genuinely have shut in production. So that compensated for that. But I think now, I mean, look at Libya, for example, and even Algeria, Nigeria. Some of these countries were not able to get their quotas, to actually deliver their quotas. But I think at this point in time, many of these countries have actually moved forward to meet their quotas. That's why it will become more difficult for countries to exceed their quotas and get away with it. And I think if you see that the OPEC, secretary have been talking to Iraq, for example, that you have exceeded for 3 months this much, and they are telling them, and Iraq said, okay, yes, we realize, and we will compensate for this or that. So that kind of discussion is ongoing, but genuinely, I don't see anybody, it took so much time and hard effort to get to this agreement, to go and reopen it again. It will be very difficult.
And I mean, putting the core members aside, what about the plus element of OPEC plus? We're into it now for a few years. Is the Russia factor it is in OPEC's interest to have Russia in the group, no matter what it's doing, rather than not have it in there? I mean, and is that impacting other producers at all?
You see, Russia is very, very important in this game, no doubts. Not only because it's the amount of production that they are now bringing to the table, but this is maybe the only backdoor diplomacy organization that you have even to discuss things with Russia. So why would anyone shut it off at this point in time? And they have been extremely cooperative in every kind of discussion, and I believe now they developed a very good relationship with the group. So, and they see the benefit. The price where it is now is the benefit that everybody is keeping. And, with all this war, with everything that is happening to Russia, they are still economically in a good position, simply because the oil prices were where it is. So that is the driver for them.
That's the incentive specifically for Russia as well. Sara, let's talk a bit about the US election, which is obviously coming up this year, but in the context of a couple of things. One, between now and then, I mean, we mentioned at the beginning of the interview how it's in the US interest and everyone else to keep peace in the region. And one is that President Biden would like that for his own sake as well and his election prospects. But in terms of, how any change in administration there, let's say we had a change and Biden is out, how do you see that impacting the region here, if at all, and delve a bit more deeply into the energy market as well, and whether you think it'll make any impact there?
Well, you see, I think Biden is lost case generally because of their stand with Israel and the way the youth in the world, forget about the Arab world, can see or perceive the unfairness and of the position of the West in this war. I think even in the US now, you don't find within even the Democratic Party people who really do not support Biden, and this actually has been the winning card for Donald Trump. Sometimes you think, which one is not better, but what is the least damage kind of scenario? Because when Donald Trump took position last time, the first thing he did, he stopped that agreement with Iran, and then things started to escalate, the nuclear program and whatever, and look where we are now. So Trump have a very
better relationship with the Saudis, for example, as well? And do you, like on that point, for example, whether it's Biden or Trump who comes in, we had an economic momentum that was building here in the region towards peaceful economic relations already, on their way. And of course, that's been completely disrupted, hasn't it? Do you think there's a chance we could get back to where we were if we see a ceasefire, if we see some kind of forward solution to to what's happening in Gaza?
I genuinely don't see any solution until Israel is forced to sit at the table and discuss. And currently, they completely, look at what happened in the UN when this resolution about recognition of Palestine, it was vetoed. And so there is no two-state solution. We really don't know what is the solution anymore. I mean, in our mind, there was some kind of a solution, quote unquote, but now it doesn't look that there will be any kind of solution that will satisfy all parties. And, I think the situation going forward will be even more complex than what we had in the past. And to me, this Gaza thing is really a turning point, not simply because of all the atrocities and what happened there is, there's a huge feeling built in the region and the people, no matter what the officials say on the top, but underneath, people genuinely believe there are no real peaceful solution to live together with Israel because of what they saw. And I mean, until the West sees this and try to balance it, there will not be any peace not for the next 50 years, because all these generations that come one after the other, it was a wake-up call for everybody. Look, this can happen in front of your eyes, regardless of what you think, no matter. And then you sit here and you see rockets flying over your head from here and there. You think, wow, but we are not party to this, and we have nothing in this, but we are in the middle. So I think the situation will not clear, and there is no clear solution to this until Israel is forced to be sitting on the table, discussing the Palestinian rights. And the only way for that to happen is that the West actually force them to the table.
Yeah, and the US, that's really the US, isn't it? Because we haven't seen much weight from Europe or anyone else. Sara, just to wrap up, back to sort of macro and prices. I mean, and the inflation situation. You mentioned at the beginning of our talk that we're dealing with inflation still, etc. as well, and that is here to stay, it seems. Many people in the market are saying that oil prices are stable now. They're sort of calm, despite all the tension that we see geopolitically, but the long-term trajectory for the next year or two is up. And some people are saying we're going to see $150 again because of this general sort of inflationary environment for commodities in general and all risk assets. Would you agree that we could see prices go towards that, or will producers check that climb?
No, I think, it's not, and we learned the lesson. When the oil prices went up, they went dramatically down, and we had bigger disruptions. So we have learned those lessons over the years. So that's why I don't see the prices going up to those levels. As a matter of fact, I think they will, come a little bit more down because of all the supply that is coming from out of OPEC. It's not OPEC, it's out of OPEC. We have lots of production, Latin America and Africa and other places that, contribute. And so those marginal barrels are the ones that dictate what kind of pricing you get going forward. And those marginal barrels are just increasing from other than OPEC, and you have closed capacity.
And we have the marginal demand that we're not necessarily going to be seeing from China and those big consumers to push the other side of that. Sara Akbar, Chairperson, CEO of OiLSERV Kuwait, Non-Executive Director of Petrofac. It's been a pleasure to have you on Halftime Talk. Thanks so much for your insights.
Thank you very much, Diala. Thank you.